They say that sometimes decades worth of things can happen in just 1 week, and we find ourselves in that position today. My name is Brian Stoffel, and today I'm going to talk about why all of this that's been happening on a geopolitical sphere has caused my portfolio to absolutely explode. Now, I want to give a shout out to Fiscal AI for sponsoring today's video. You'll see more from them in just a minute, but let's get to what we're actually talking about here, which was Maduro being kicked out of Venezuela. When many people woke up a few days ago, they found out that the leader who had been there since roughly 2013 was no longer there. The United States brought him, they took him out of the country, and he's now standing trial in New York. Now, this video is not here to discuss the legality of what happened or the geopolitical concerns per se. It is more to just focus on how it affects what this channel focuses on, which is investments. And in that vein, it's worth pointing out that my number one stock in my portfolio, Mercado Libre, has jumped double digits in just 2 days. And actually, C Limited has as well. Now, the big question is, why does this matter? Maduro leaving Venezuela to these companies? Well, to answer that question, I think we need to do a little bit of a history lesson in Mercado Libre. If you're not familiar with the company, it has a number of different revenue streams. The first and the oldest is a e-commerce marketplace. Think of this as a combination of like an eBay or an Amazon, where people can list things for sale, buy them, and sell them. They also have Mercado Pago, which is a payment solution that for many Latin Americans is the first time that they've had a banked solution that they can have, and they can do it all from their smartphone. Third, they have logistics services to deliver packages, again, very much like Amazon, called Mercado Envios. And finally, they have advertising, which is a revenue stream that is growing quickly. It's also worth pointing out they also have a credit business, Mercado Credito, that not only gives loans to small businesses, but has a growing credit card business. Now, Mercado Libre is present in all of these countries that you see here, from Mexico all the way down to the southern tips of Argentina and Chile. But today, 3 of them account for the lion's share of what's happening. Third place goes to Argentina. Second place, very close ahead, is Mexico. And the big one is Brazil. Now, to kind of visualize this for you, we're going to head on over to Fiscal AI, a website that I use every day. If you click the first link in the show notes below, you'll be able to use this site for free with limited functionality. For a full year membership, you'll get 15% off by using that. So I head on over to Fiscal AI, and what I pulled up here are the different revenue streams that Mercado Libre has. This is revenue from different geographies. Now, what's worth pointing out here is that the green, which you can see is the biggest, is Brazil. That's 52% of revenue. Coming in next at 22% is Mexico, which has been growing very fast at a 52% annualized clip since 2012. And then the orange section right here, which is at about the same but not growing quite as fast, is Argentina, still growing at about 38%. That's pretty good. But it's important to note that this was not always the case. It was not always these big 3 of Brazil, Mexico, and Argentina. There used to be a different player here as well. And for that, we can go to this visualization I've made of revenue by geography. What I want you to focus on here is the yellow part. And the yellow is Venezuela. As you can see, back in 2008, it was the number 2 geography, and it actually rebounded until 2013, holding that number 2 position. But watch what happens once 2013 hits to the revenue that Venezuela brings in. It precipitously drops off until 2018, where it was deconsolidated completely and falls behind everyone else. So the big question then becomes, what happened in 2013 and 2014 as far as Mercado Libre is concerned to see it fall off so much? And it really boils down to 3 things. First, Hugo Chavez died. He was the leader of the country that brought it its socialist revolution in the late 1990s, and in 2013, he passed away from cancer. Second, the price of oil crashed, and that's incredibly important because Venezuela has some of the largest oil reserves and counts on oil more than just about any other country in the world to fund itself. And third, because of that oil crash, there was a currency trap where the government said, any money that is not denominated in our currency cannot leave. Any of our denominated currency cannot leave, cannot be traded in for dollars. And then the government started printing money to get out of trouble. Now, to understand the dynamics of this, let's go to that oil crash, because to understand the big three culprits here, it will help you understand how we got to where we are today. Now, first, there was a U.S. fracking boom. The United States went from importing tons of oil to meet its needs to being able to actually export, because fracking produced so much oil, and that increased supply on the global market. That's not good if you're counting on oil. A 1-2 punch then occurred where China had a slowdown in growth, and China was a huge customer, creating demand for oil. So you see supply going up, demand going down. Obviously, the price of oil is going to fall, but the real death knell came when Saudi Arabia and OPEC created what we call the Saudi squeeze, where they actually maintained production even though supply was going up and demand was going down. Now, their intention for doing this was to undermine the U.S. shale producers and get them to go out of business. But that's not what happened. So what did happen? Well, first, OPEC could afford to do this because it only cost them $10 to $20 per barrel of oil to extract that from the earth. And oil dropped to about $50 per barrel, so they were still able to turn a profit. U.S. fracking industry, which is where OPEC was aiming at, actually responded by just becoming more efficient and innovating. And by doing this, they were relatively unaffected by this move that OPEC made. Who it really affected was Venezuela. They were the hardest hit. They needed oil to maintain its $100 plus per barrel price tag to support its generous social programs because it was a socialist state. So what happened when this happened to Venezuela? Because remember, Chavez just died. Maduro was inserted. Well, it wasn't pretty. As I said, they controlled currency and they stopped capital from leaving. So they implemented strict currency controls, and they made it impossible for cash to leave the country, which meant that they were just going to print a bunch of their own money. They then nationalized virtually all private businesses, transferring ownership of those things to the state. And importantly, Maduro knew that in order to maintain his grip on power, he needed to maintain the loyalty of the army. And he did this by slicing up those nationalized industries and giving them to different parts of the military. So what was the effect of this from 2013 to 2026 in Venezuela? First, a historical GDP collapse. I mean, look at this. The U.S. during the Great Depression saw GDP dip by 30%. Super painful. The Spanish Civil War saw it dip by more than 30%. We are witnessing an 80% contraction in Venezuela's GDP, and this is not during wartime, which is unprecedented. Oil production absolutely collapsed from 3 million barrels per day to less than a million today. Inflation went through the roof, up over 130,000% since 2013. It was already high with 56% inflation, but it absolutely boomed, and it led to this, an absolute exodus from the country where nearly 8 million people have left. That's about 1/4 of the population of Venezuela leaving. Before this, about 30% of the population lived in poverty. After about 90%, and I can say I'm coming to you live right now from a coffee farm in Costa Rica. I've lived here for part of every year for 16 years, and homelessness is not something that we often see. Of course, the homes that exist might not be to the standards that many North Americans are used to, but it wasn't until about 5 years ago that we started seeing it, and almost to a T, it was Venezuelans making their way out of the country and up towards the United States. So I have seen this with my own eyes as well. Now, let's get back to Mercado Libre, because what they had to do in 2017 was they fully wrote off all the assets that they had in Venezuela. They deconsolidated it, and they basically said, look, we aren't able to really operate in Venezuela anymore because the money that we earn there can't leave the country. Well, with Maduro leaving and the potential for a more open economic society happening. It's worth pointing out that Mercado Libre's storefront on the internet is actually still active. It's kind of like a zombie coming back to life. It remains accessible to local users. And while there is limited support, the potential for this economy growing, for Venezuela, this kind of ghost contributor to Mercado Libre's operations, being able to open up, it gives the company promise. Now, will this happen overnight? Absolutely not. There's no way that this will happen. This will take years to happen. However, it's important to remember that the stock market is a forward-looking entity. And so stock prices will go up before the results start showing up because people are willing to pay more for the potential for that new revenue stream to shore up. So it's not surprising to see Mercado Libre surging on this news. The next question then becomes, well, why is C Limited going up by so much? And the answer to that is much more simple. This is much more of a halo effect. If we head back to Fiscal AI and we look at where C Limited gets its revenue from, which, by the way, C Limited is much like, it's not exactly the same, but much like Mercado Libre, with a e-commerce division, a payment division. They also happen to have a gaming division. But what I've done here is I pulled up where the company gets its revenue from. And the green part is Southeast Asia. That's where its primary business is. But the purple right here is actually Brazil. They do have operations in Brazil that have been growing quite quickly. And the idea here is that if things can stabilize in Venezuela, there might be a halo effect within the hemisphere as well that could stabilize things. And that might be a net positive for C Limited. It's worth noting that I also think that C Limited is quite cheaply valued as it was, so that any positive movement would have an outsized effect on C Limited. In fact, I highlighted it as my number one stock for 2026, so I'm not surprised to see that move. Look, overall, I am absolutely not selling these stocks based on what's happening. In fact, I think that there might be cause to add to them, even though there's such an outsized portion. Now, remember, this is not me saying that this is a good move over the long term. There's two reasons I say that. One, I can't tell the future. I don't know how things will unfold in Venezuela. And number two, and I think this is most important, I don't have any real life skin in the game. I don't live in Venezuela. I can't say how this is going to change things or if the move is good or bad. I leave that to the people who are there to make that determination. But as it concerns investments, this is why my portfolio has exploded based on this. I call it a gray swan happening, where very few people probably predicted that this might happen in 2026. It did. It has benefited my portfolio, which is actually in keeping with the fact that this is an anti-fragile portfolio where it has companies that are supposed to benefit from chaos. What will I be doing moving forward? Well, make sure you hit the subscribe button down here so you can find out about any moves I make when they come up. Until then, Brian out.